I'll just kick off one question to Justin first of all. Justin, in your presentation, you spoke about the fact that we haven't seen per capita income growth for 5 years. Perhaps you can explain some of the reasons for that and the outlook going forward.
So by per capita income growth, we're talking about national income growth and not GDP growth. So the difference being what's happened with our terms of trade. So the terms of trade have come down 25% since late 2011. But when you look from, I think it's from late 2010, that kind of national income measure per capita has actually gone backwards a bit. It went up a bit, and now it's actually lower than it was back in 2010. Now, you know, at the end of the day, it's kind of income that ultimately matters for, you know, a nominal economy, that, you know, around profits, wages, government revenue and all that. So the key driver of that is the terms of trade. It's that fall in the terms of trade that's been weighing on our income growth, even though our output growth or GDP growth over that period's probably averaged, I think on the chart I had around 2.5% per annum. So there's been growth in GDP, even though it's been below average. So the simple answer there is the falling terms of trade and commodity prices are leading that. And that's going to continue. So in terms of the outlook, you know, hopefully our terms of trade don't drop another 25% from here. That's certainly not our expectation, because the key commodity prices for iron ore and coal have already come down a long way. But we do expect the terms of trade to go down further from here and drag the currency with it. But for our income, that is a negative for the next couple of years.
I would have just said much more simply, that new Audi you bought last year, it was lucky you bought it last year.
Darren Grimsey from EY. Very pleased to say I did buy an Audi last year, so I've pocketed that benefit. I really want to turn to infrastructure and the comments made by Professor Maddock around the superannuation industry, because we've been hearing for some time, particularly in the political domain, the encouragement of the superannuation industry to invest in infrastructure. But it seems that over the last few years, there's been some structural inhibitions to that within the industry itself. Namely, I'll point to the relative size of our funds, which are significantly smaller than, say, the Canadian funds, which are prolific in that sector. Also, the contributory model that we have with member choice, which does lead to that thorny issue of having to switch, you know, having to be able to switch, even though the switching between assets is actually quite low, but you have to have that ability to do that. My Super seems to aggravate some of these issues as well. So what I'm interested in is what the professor thinks have been structural reforms to date, and what needs to happen further to get the superannuation industry into that position of being a more sophisticated investor. And that probably applies not just to infrastructure, but also more broadly to the more investment style categories that you pointed to, which I do agree needs to happen.
Yeah. Do I have to turn this on? No, it's on. Okay. Really important issues, yeah? We've got relatively new institution in Australia, I mean the superannuation funds, when really in size they are really less than 15 years old and are in the process of trying to develop a whole lot of mechanisms to find how to channel their money to where it's best used. And so I think immaturity of the institutions is one thing, and just as they grow, they will become more sophisticated. As they get older, they will become more sophisticated. The second thing is that there do seem to be significant economies of scale in superannuation management, and so, funds management, I guess, superannuation management. And so you do expect a lot more consolidation in the sector. I think the biggest industry funds, Aussie Super's probably got 60 billion under management or something like that, yeah? And so very hard for a company which is only managing 60 billion to take a 1 billion risk on a new piece of infrastructure. And so that's why you need to have some intermediate mechanisms to do that. So as I said, banks will form syndicates to actually manage new risks. which none of them individually is able to do. And the superannuation funds are in the process of doing similar sorts of things. So I assume that we'll get there. But they also in the process have to build an ability to actually assess whether it's worth investing in a piece of infrastructure or not. And so that credit assessment skill traditionally has sat inside the banks. And so I think the funds are in the process and actually need to move further along in that process of becoming more sophisticated in their credit management. The issue you point to on member choice is actually really interesting. I don't know if people understood the point. The point is if you're managing a superannuation fund and everybody that has got money in your fund has got the right to take it out tomorrow and give it to somebody else, you have to be bloody careful not to invest in things which are locked up for too long. Yeah? So you actually have to deal with the possibility of a run on your fund, just as a bank has to deal about the risk of a run on a bank. And so to some extent, the principle we have in Australia of members being able to move their money at any time, anywhere, makes it a hell of a lot harder for the super funds to actually manage their money. And so when there really are, think about it though, and banks face that same problem all the time. Deposits potentially can move at any time, but you lend for mortgages for 25 years. So again, I suspect that as the funds become more mature in managing their money and have a better statistical base to see the risks of money and certain types disappearing quickly, then they will be more willing to take longer term investments and lumpier investments than they have so far. So with member choice, how member choice interacts with the investment decisions of the super funds is something we haven't thought about enough. I mean, you could do things like saying, well, maybe the super fund should have some liquidity provider of last resort, just as banks have a liquidity provider of last resort. That would be another mechanism. But I guess I'm inclined to assume that they will solve the problem themselves, even though it's a little slower, and that might be a better solution than having the government come in and provide a new sort of reserve bank for wealth managers. Yeah. Thank you.
While we're on
somebody here had a question.
Oh,
The man in the blue shirt.
Okay, yes, go.
Martin Hebletzel from Siemens. Thanks for those great presentations. You showed some of the trends and some of the vertical markets that will be natural winners out of that, for example, education, tourism. So turning to picking winners in vertical markets, the federal government's named the 5 growth initiatives, so oil and gas, mining, advanced manufacturing, agribusiness and healthcare. I'd be interested to know in the long run if, picking winners where Australia has natural competitive advantage in the vertical market sense, if you've got any views on those.
That's a very good question. It's always tough when you're kind of thinking about the very long term, but I mean, just based on those sectors, if everything kind of falls into place, you'd think that there's clear opportunities there. Most of them revolve around Asia and our demographic challenges around ageing and health. So, I mean, health's already growing very quickly. It's the biggest employing sector in Australia as a share already in every state. Agribusiness is a very small share of the economy. It's important if you're a bank, though. But the potential there is certainly there in Asia, not just China, but the ASEAN economies as well, and India. So I think all of those seem kind of reasonable to me. Advanced manufacturing, we're already doing pretty well there, I think. It's just the other bits of manufacturing that aren't, and they're bigger, unfortunately. So it all sounds well and good. Does the government need to pick winners? I don't know. I mean, maybe sometimes we complain the government's not showing enough leadership in some areas. So I guess maybe at the margin, if it shows some leadership in that sense, that might not be a bad thing, particularly if it focuses the mind a bit on what government and the private sector need to do together to seek out those growth opportunities. I'm kind of with the professor though. I'm fundamentally a big believer that the market tends to work pretty well most of the time in terms of seeking out where the best opportunities are, particularly in the long term. So the role for the government is just to provide a helping hand. So the thing, an example there is, I think someone like Austrade, they do a lot of good work that I see sometimes, kind of behind the scenes that probably other people don't see. It's not sexy stuff. But they, that's an example where they might be accused of picking winners in some industries, but they provide a lot of help to particularly emerging businesses make good use of opportunities, elsewhere. So I think there is an element that we should be doing that, but I think the market will kind of just sort that out fundamentally.
Can I come in on that one? Obviously we agree, but the place I do disagree. I mean, what we're trying to do is to actually generate new export industries for Australia, grow our export industries. I mean, the reason we want to grow exports is so that we can pay for imports, and we all like imports, and that's what will help raise our standard of living if we can actually buy imports more cheaply. So we're thinking about those sectors in particular. I mean, there are problems for the government. I mean, do we hamstring our hospitals and make it really hard for them to export health services? I mean, if you look at Florida, there's a huge industry there where everybody in South America goes to Florida to actually get their medical interventions. But we have people in Australia going to India for their medical interventions rather than Indians coming to Australia. Now, is that something to do with actually how we manage our public hospitals, that we're not providing the appropriate incentives for the hospitals to actually grow in the way we provided incentives for the universities? I mean, the university sector, when I was teaching there in the early 90s, or 80s and 90s, was not a big export industry. But suddenly the government said, okay, if you can make money overseas, you can keep it. Well, all the vice chancellors went on an aeroplane the next day, and suddenly we have a huge industry in exporting education services. I'm intrigued why, if there's something in how we structure our public sector, public health sector, for instance, that we don't get the same sort of response, or haven't had it so far. And as you look across those industries, I'm just intrigued to the extent to which we're actually hamstringing a lot of our business. I think in the vet sector, there are some states anyway have rules that basically stop the vet sector from actually doing stuff offshore. Again, that just seems really odd. Why would we do that? You also wonder whether Queensland and New South Wales, which refuse to privatise utilities, actually are ignoring the fact that those companies could well be selling businesses into the Philippines and Indonesia and Thailand and all those sorts of places, but as government-owned utilities, they don't do that. And so I'm just intrigued to what extent, yes, they're good things to pick on, but let's actually then try and take away some of the public sector barriers to people exploiting the opportunities in those sectors. So that's where my concern is. I think it will work itself out, but we're actually putting a lot of roadblocks in the way of doing it quickly.
Hello, Fiona McNabb. I wear quite a few hats. I'm an industry fellow lecturing at Monash in finance and also involved in the industry super fund area. But I'm actually asking this question as chairman of a startup disruptive business in the ag sector. One of the things that I've observed over what feels like forever is we're looking for funding. And of course, for startup businesses, you basically can't get funding here in Australia. It all has to come offshore. And is there some way we can fix that up? Because it actually means that the return, well, we're not generating the appropriate returns, in my view. I mean, I know there's extra risk, but the returns are there. And it means that in this particular case, we won't move offshore because we can't, but most, of course, are moving offshore. And that's obviously, just the whole issue of innovation and all of that sort of stuff as well.
Okay, I'll take that one if I can. Australia's about 2% of the world economy. So really, we should only realistically expect our Australians to be funding 2% of innovation. And foreigners we'll always expect foreigners to be funding an important part of our innovation. So long as we're funding a significant part, and you mightn't think 2% is very much, but we are only 2% of the world economy. And if you want to access capital markets, Australia only effectively constitutes 2% of the world's capital. So 98% of the funding for lots of good ideas is going to come from offshore. So the fact that we do stuff offshore, it makes perfect sense when you think globally. In terms of the mechanisms to generate it, I mean, I too am involved in a startup, and we too are having awful trouble getting people to invest in it. And the hardest phase for us is actually at the angel stage. I mean, it's not hard to have a really good idea, you think, and it's not hard to build a product, you think. But convincing somebody else that's going to make a lot of money and they should give you money to actually support your idea is really, really hard. But I do think that there are, as I said earlier, there are institutions which are evolving in Australia to help solve that problem. And I also think that the superannuation funds are going to be important as they are willing to take risk in the alternative asset class. But it will take time. I don't see a quick solution. But yeah, don't be too anguished about the fact that an awful lot of good ideas go offshore. That is the nature of the world capital system. Sorry, mate, you want to go with that?
No, it's a perfect answer.
We've got time for one more question, if I can encourage the room.
I'm Ben Potter from the Australian Financial Review. I'd be interested in an answer from either Rodney or Justin to this question. In the context of funding infrastructure, we have this situation in Victoria with a cancelled major road project and some sort of debate because of the unusual circumstances of the signing of the contract and the cancellation of it and the election intervening, some sort of debate about the extent to which that is a sovereign risk issue or not, and how it might affect future Victorian and perhaps even other Australian privatisation, PPPs and so on.
Probably I better answer that. He works for a company, he might embarrass his company. I'm an academic, I can say anything. Yeah, I mean, I think it is an important issue, and I think it's actually a problem with our democracy. We have people in opposition, and not picking on Daniel Andrews in particular, who make all sorts of promises, and then when they get into government, find it really, really hard to actually do it. And so I think we've got a problem. I mean, I worked in the Victorian government for a while, and when the Bracks government was elected, and they came in also having made some really odd promises, and you really wished as a public servant that they hadn't done that. And you can sort of see to some extent what's going on federally. Tony Abbott also made some promises that he probably wishes he had never made. And so we sort of have a level of naivety, I think, in all of us as citizens, that we vote for these people when they make these promises, and then I suspect often knowing that they're probably not going to be able to do what they said. And so I do think that there's a problem in how oppositions work in Australia, and I wonder whether we need to actually provide oppositions with more support so they actually can more sensibly develop their policies and not make outrageous decisions and promises. Not that I'm saying that the Victorian promise was outrageous, Mr. Potter. In the particular case, I mean, yes, of course, if a government goes back on a significant contract signed by a previous government, then that's always going to damage your reputation. How much it damages and whether you can find other ways to solve it is not clear. But I think everybody assumes that subsequent governments will live up to the promises made by their predecessors.
I agree with that. The only thing to add there is that to some extent it's kind of not new, which is actually not encouraging. But if you look at the mining sector, for example, in recent years, or even further back, that a lot of the money that's gone into the mining sector has been foreign money, of course, most of it. And there's been high-profile examples, and a number of them now, of issues, let's call them, with governments and process and politics that have, in inverted commas, burnt those foreign investors. Now, including from China. So this has been around for a while, but you do get the sense that, particularly with greenfield, developments and the amount of money that needs to be put up front for greenfield investments in whatever sector, whether it be public infrastructure, mining, whatever, housing in places like Sydney with still tough zoning and things like that, that you do get a sense that if there's enough of these at some point, there might be a tipping point that foreign investors who do have a lot of cash to spend at the moment, and Australia is attractive, but if there's a tipping point that they just go, oh, it's just too hard. I don't think we're anywhere near that yet, but there have been enough examples where, if you've got money in Asia and you can put it elsewhere, particularly when Australia's not growing that quickly at the moment, that you'd have to be thinking twice, I think, about whether to put it in Australia. We're not there yet, but that's certainly a risk.
What a perfect lead into our political session after morning tea. Everyone, please join me in thanking these two gentlemen, not just for their contribution today, but for their significant time and intellectual property that they've put into the Economic and Political Overview publication, and their contributions to other EPOs we've had around the country. So please join me in thanking Professor Rodney Maddock and Justin Fabo.